Good day. This is the Elliott Wave weekly update for the S&P 500 being recorded on Saturday, December the 7th, 2024. I am going to start, and let me just switch this with the SPX, the cash market for the S&P, and excuse me, and I'm going to go out to that 3-year weekly chart to do a quick review. Again, what the largest degree that I'm showing is the primary. You can see primary wave 4 completed in October of 2022. And from that low, we have been tracing out a primary fifth wave. What's going to be inside that primary fifth wave are 5 waves of intermediate degree, of which we are now getting close to the completion point for intermediate wave 3. There's intermediate 1, intermediate 2, and all of this rally that we have seen basically since October of 2022 is all a part of intermediate wave 3, at least from December of 2022 till now. We get to this high. Now, within intermediate wave 3, there'd be 5 waves of minor degree, of which we have 1, 2, 3, and 4 complete. We're in minor wave 5. Within minor wave 5, there's 5 waves of minute degree, of which we have 1, 2, 3, and 4, which I'll go over because I did put that labeling in. And that puts us in minute wave 5 of minor wave 5 of intermediate wave 3. So I think that at least on an intermediate degree, we are getting close to finishing that third wave, which is always not always, but most often the longest and the strongest within a 5-wave sequence. You can see that on an intermediate degree, it's pretty dynamic, considering that it started from a low at 3765, I'll call it 3765 in the SPX. And Friday, we closed at 6,090. So quite the nice rally that we've done in 2 years. So let's kind of dig deep into this one. I'm going to immediately come down, and I'm just going to come down to the 4-hour chart because I really want to get inside this minor fifth wave. And so there is the minor fourth, and that was August the 5th. And so that is where we got into minor wave 5, which is always going to be a 5-wave structure. And right now, I still think that it's not necessarily diagonal here in the S&P. So we have wave 1, minute degree, wave 2, wave 3, wave 4. So I'm going to bring it down to the hourly charts, and now we can go in a little bit and we can see why did I mark that 4? Because I had left open the potential that the market still had the possibility that this low that we had on the 15th of November was just wave A of minute wave 4. And so I pulled the others off because the market sailed through the levels that would have contained an irregular B wave. So in other words, if this was ABC, it was minuet wave A of minute wave 4. And all of this was working out to be a B wave. So it would have been AB, and then we're working 5 waves up. And so it went above and still looks like we need a little bit more. So I kind of pulled that away, marked this as minute wave 4. So that's the low on the 15th of November. And then we started this minute fifth wave up. And so we have 1, 2, and then we broke into 1, 2, 3, 4, 5 for minuet wave 3. Now that would have been that high that we had on the 6th, which would have been yesterday. So on Friday. So that high being 6,099.55. So for all intents and purposes, it's 6,100. And that's in the cash market. And I know we had resistance there. It held, but if I'm marking this as minuet wave 3, we're going to come down into minuet 4, go back up into minuet 5 to complete this minute wave 5. And so then I think that we're finishing intermediate wave three versus having to go all the way back down to this area in a C wave of minute four. Now, could that still happen? Well, if it is, it's got to really kind of pick up and begin. So, and I think from these levels, if it were to happen, it would be a shock to the market. That's what would drive it lower. A strong shock to the market. Is the market capable of receiving that type of a shock? I would have to say yes. Absolutely, it's possible. Again, we continue to have a number of um, hotspots around the world, powder kegs, geopolitical powder kegs. The largest for me right now, in my mind, is the Ukraine situation. Russia and the Ukraine and what's happening there. But now we got another one brewing just a little bit, go a little bit south of there, and we have another one brewing in Syria. And what's going to happen in Syria, which is actually still on one side has the backing of Russia and Iran. On the other side, we have the United States and a few of the other allies. So we've got all of this happening while these rebels, quote unquote, are taking over cities and now getting ready to uh, surround the capital. So situation that's building, that's brewing, and nobody knows exactly what's going to happen there, but we've got some stuff going on. And we still have all of this Israel, Iran, Israel, Hamas, Hezbollah, etc. That's all still sitting out there as well. So could there be a jarring jolt to the markets? Unseen, yes, there could. But it's going to be enough to not just jar the market, it's going to jar a whole bunch of things. So again, those situations, those powder kegs are still there. Hopefully, they're not going to get lit. If we're dealing with just an economic picture, right now, the markets, in my view, remain solidly in that year-end rally. And possibly because we got a little bit of a late start, might just push it right through the December 20th expiration. That promises to be the largest this year, or the largest that we've seen since June. And so it's got a lot that's going to be coming off on the 20th of December. And so I think that that's really going to be, we have the year end expiration, but that's really just more surrounded in the indexes, ETFs and indexes that do have those daily expirations. So that's still out there too, and that's on the 31st of December. So that's the last expiration of the year. But the 20th is the last expiration monthly. And also that would just go with all of the underlying stocks. Now, because the underlying stocks won't have a December 31st expiration. They will have the Friday prior, which I believe is the 27th. So again, those are the expirations that are kind of lining up. The 20th being having the largest positions right now. The 20th also when the futures in the SPX or in the S&P, in the NASDAQ, in the Dow, in the Russell, etc., expire on the 20th. They'll all be rolling way before that, and we'll be shifting out and start trading the March contract before the 20th of December. I bring that up because we're looking at higher levels, and let me just go over and take a look at the ES, and we're going to just to see what we got going on. And you can see that we have the March, and March right now is about $70, $70 higher than the December. So if we had to come back and we're looking at the SPX chart, and if it got above 61.28 and we had to add $70 to it, we're looking at 6,200. If I go back over here and we just see where they're trading, we see it's trading at 59 to 67. Okay. So again, if we were going to take this up to 61.20, and we still need to add that $70. And so we're looking at 61.90. We're looking at that 6,200 level. And so is that possible by the 20th? I'm going to say yes, or shortly thereafter, even though in the December contract it won't go to show. And so in the SPX, if we're going to really move up that high, then I'm going to say we're getting above 61.28. We still have more upside to go. Now, how am I going to measure this out? That we have 1, 2, and this is 3. We're looking for 4. That's where these are our break points. These are our points of support for if indeed Friday's high put in the top for that minuet third wave, and we're going to start to pull back. If we still got to leave open the possibility that we've got maybe one more little high here to go, and that actually I'd be looking at the possibility that we might be, let me see one little factor here, see what I got coming out. Well, we got the 1.618 we've already gone through, so the next one would be 61.59, and that's on the full-blown 2.618. I can also add a couple more, so let me just put one more in right there, and I'll leave it on that color because I'm just going to be showing 1.882, and we're going to say okay. So you can see we got 61.10. So if we had a little bit more, and we were looking for this fifth wave is not complete. So then we're going to be looking at, I can just change this color. So let me just go like this. Change this to yellow and put this in yellow, because that would be if we had a really dynamic, really another strong push. Then we're looking at 61.10 to 61.60. And that would just be to finish this third wave. I think we do have a fair chance that we might go up and finish it around 61.10 and put the 3 over here and still get that 4. Again, it's only about 10 points higher than where this high was coming in. So it's not going to make that much huge of a difference, but I'm going to allow for it. So I think we're going to come down in a minuet fourth wave, and then we're going to go up in a minuet fifth wave, and then that once that minuet fifth wave is complete, it's going to in turn complete the minute fifth wave, and then turn the minor fifth wave, and then turn the intermediate third. So I do think that we're close. Now again, here we have a lot of space in between. I'd like to get this fourth wave, and that's going to fill a lot of this in to where this market can go. And these would drop off because once we get that 5 in place, no matter if it was there or if it's going to be up a little bit higher, these would disappear, but we'll fill in some other levels. Now, this is the intermediate wave 3. Now, that's just where intermediate wave 3 is 3.882% times the length of intermediate wave 1 here in the NASDAQ. That is just a calculation. It's not necessarily going to be like written in stone that it can't go above that, because I actually think it's going to. So what we then, as I discussed and continued to say all along, that what we begin to look for is the structure itself. And what we're carefully counting up from there is, again, that 5 waves. And let me just push it back out to here, that 5 waves of minute degree. And then internally, we're looking for 5 waves of minuet degree. So I do think that we are getting close. Each day we go up and we pop and we finish another wave, we're close. Now, whether this really is going to hang on till the 20th, it may. It may. We could just falter and go and falter and hit around, maybe go down a little deeper, then rally back and take our time. And it could take us to next week and the week after. Or we finish this up and we do start that larger intermediate fourth wave. Now, a lot of what we're seeing, again, is rallying around the year-end posturing. What are we keeping? What do we want? These are all portfolio managers, ETF managers, everybody kind of deciding where they're going to put the money. And like we saw on Friday, just Tesla been on a giant rally. And whatever the reason is, don't know, don't really care. The stock has been on fire. Closed Friday at 389. We know just from other calculations that in Tesla, I'm going to check and see come Monday to see exactly where that might be. But the call wall's at 400. It seemed that that's what they're going to try to hit, or like they were trying to hit on Friday. And as it turned out, the stock closed at 389, but in that after hour, the stock was trading at 394. So we're knocking on 400 store. So maybe that, and with a couple other stocks, we are going to see 6110, maybe even higher, before wave three is complete. If if it is, and we're going to drop down, our markers are 6,042, 6,006, 5977. My gut tells me that we should not drop below 6,000, but if we do, I've got that final support at 5984, and then I've got fib support at 5977. I just think that coming down over 100 points would make it a pretty heavy four, but it can happen. It can happen. With wave one being all the way down here, sure, it can happen. But we're not necessarily looking for it because it would be big compared to this two. We have a lot of things that we compare it against on an Elliott basis. But I will share that one of the things that I've noticed over this whole rally period is that fourth waves can tend to be a lot longer and go a lot deeper than what we're looking at. And the relationship on the rule of alternation that Elliott gave us just doesn't seem to work anymore. And that's not consistent, but we're kind of looking going like, okay, that was a zigzag. So this should be, if it's a four, should be a flat. So, but here, because it's the minuet four versus the minuet two, that's pretty much a zigzag. And we'd look for this if it's the four and it's the startup, we're looking for a flat. So we can come out much higher, but I've been looking for at least the A wave possibly to get us down. So that 1, 2, and then we're going to drop a little bit, 4, 5, and then come up and then come back down. I don't know. We're going to wait. We're going to see how this all kind of pans out. But I do think we kind of need to make a little bit of a pullback. Now, other things that I'm finding extremely interesting. Look at this RSI. This is a new all-time high. Look at the divergence in the relative strength. Not necessarily spelling out a very positive picture, to be honest with you. There's the high. See the mark? There's the high. That didn't make it very far and just kind of came flying back down. So it's telling us that the relative strength in the market is like, questionable. Since we're making new all-time highs, and we're getting above that new all-time high, but we didn't get above that point. So I was like, interesting. Divergence. And that's on the hourly chart. And I'm sure, let me go out and just take a peek on the daily chart. You can see on the daily chart also. New all-time high didn't make it. New all-time high, much higher, right? This was 6,017. This is almost 6,100. Kind of equaled it. Didn't break it, just equaled it. So relative strength is kind of probably just really like in the NASDAQ, focusing on a select group of stocks. Back at the range, let's go back down to the hourly chart. So I'm basically thinking that we're going to come down. All of our moving averages remain pretty strong for continued upside. Again, just go rolling out here to the daily, and you can see all looking pretty good. I'm getting a little bit tired, getting a little bit not as angled, as strong, but again, that's also RSI. But I think it should still have enough that we're getting up there. Now, one more thing. Could we be done? I've said it before. I'll say it again. It's like, if it is, and I'm off by one move, so this is actually, we got the 3 and the 4, and this is the 5's coming in up here, then this should not be wasting any time. we'd be like, boom. That would be my signal that is like, yep, that's all done, and now we're going to drop. But it doesn't appear that that's going to be the case, as was left on Friday, and what I think may come in starting tomorrow in the Globex session. So again, I'm going to continue to look for additional upside. I do believe we still need to get that 4 in. If that is the high and doesn't need to make a new one, then I'm going to look for that to start coming down. But there's our markers for where I think we can kind of come in. I think from here, from about 61 back to 60.40, pretty good. If we go down A, B, C and get a nice flat and then rally off of that, that leaves that intact at 61.28, but we'll be able to add additional levels that'll fill in this. Because I think getting above 62 now, is it possible? Of course. But do I want to make it probable? Up in the air, to be honest with you. Up in the air. My RSIs are saying, you may have certain stocks make new highs, but they're going to be weak. Okay, let's go over and take a look at the ES. Same diff. If I jump out to that 3-year weekly, got the same diff, all crowded up in here. Going to bring it down to that 4-hour chart, and we're taking a look on the inside. And I'm going to bring it quickly so you can see that there's the 4. That's the August 5th low. And then we have 1, 2, 3, 4. We're inside that 5th, minute 5th. I left in the futures market, I left these here, the fib levels for the irregular minuet B of minute wave 4. I left it there. Just we've broken this one, and I think not that it's wiped it off, but I believe that I'm counting that it could be done. And again, if it is falling into the irregular, we need to come off. We can't fool around. You can't continue to go up as it has been doing. It needs to go to the opposite direction and get a little bit of force behind it and start breaking the 50 hourly, break the hourly 50, come down and break the hourly 200 and keep on going, because we'd be looking for it to come down there, right? Irregular A, so this would be A, this would be B, and that C wave should be mean, ugly, and drop quick. That would be one signal. So I'm kind of leaving them there for right now. We've not reached that 1.382. So that's another reason I'm leaving it on there. It's not as evident in the cash market as it is having the ability to leave it here in the futures market. All right. So looking above all of this in the futures market, we have the minute 5th wave, the minimal at 61.91. So again, we're bouncing up and bopping our heads on the 6,200 level basis the future. And basis December, is it possible? It is. So if they get this done before the expiration of this December future, then 6,200 is a possibility in the futures market to get us completing the minute 5th and in turn the minor 5th and in turn the intermediate wave 3. Now here's our next markers for those, this being the minor, 62.76, this being the intermediate, which is 62.40. So 62.75 minor degree, 62.40 on the intermediate degree, and 61.90 to 6,200 on the minute degree. So we're lining them up. And as I've been talking, and I'll say it again, we rely on the structure for our completion rather than the fibs. These are just giving us levels. If we really kind of springboard, if we really start to go, we could get to these levels. Not a problem. But it's got to have some power behind it. It's got to have a very solid narrative behind it. And it may happen. So, getting back into this, our levels, should this come in, I'm leaving them there. We know the story. If it gets there and it suddenly just drops like a stone, then yes, I put this as minuet wave A of minute wave 4, minuet wave B of minute wave 4, and then we're coming into minuet wave C of minute wave 4. And then we get to do that fifth wave all over again. So, and yes, it's still alive, to be honest with you, because don't forget that we've had that seasonal effect. We're up at new highs, and it's been a strong rally since the 19th of November. Been a very strong rally from 58 to 61. That's pretty strong. Now, if we're in that irregular, where would we end up? Probably back around 58.50 and get down there real quick. Well, we've been looking for on seasonal charts, they're showing this dramatic rally and then a quick drop. In December, right about second or third week, we're getting ready. We could be there. So that's why I'm leaving this here. And what is our key going to be? We start dropping precipitously. We break the 20, we break the 50, we break the 200 and the 6,000 level, a handle, however you want to call it. It's going to go right through it. That's my thought. That's going to be our ticket. And again, I would think that it needs to be triggered by some jarring type of news. Something that's going to jar the market out of its bullish mood. Again, I want to just go back out to that daily. Let's take a look at on here. These are a little bit showing a little bit more strength than the others. In fact, now getting close, which is good. Just kind of walking that rally up, still all angling higher. So right now, I'm going to leave that the minuet wave 3 is there as marked, and that we're looking for that fourth wave not to be as devastating. If we go up and we make one new additional high, we get up to here and halt and turn and decline strongly, well, then we're getting a very clear signal that it's likely a minuet C wave of the minute wave 4. And it will have limitations to the downside. I think we could drop below 58.50, but not that far. And we'll see. Otherwise, we go up, we finish, come back down in a minuet fourth wave, hold these levels. Particularly 60.55 would be a nice level as well. So we got 60.63, 60.55, 60.33. But that would create maybe a little bit more of a rift because it's breaking the hourly 200 in the process. So, and then we, under the preferred, we come down in a 4, we go back up, and we finish this minuet wave 5. All right, that's going to be it. The next the next daily update will be on Monday, December the 9th.